Hey everyone, welcome back to Corporate Decoder. Today, FORLW Corporation, the registrant, just filed an 8K, and we are seeing some significant leadership changes that signal a big strategic shift. Quick note, this is not financial advice, just my take on public filings for educational purposes. The company is shaking up its board of directors and its chief financial officer, which tells us they are likely preparing for a new phase of growth or a major deal. Before we dive into that, let's quickly cover what this company does. FORLW Acquisition Corporation, or FORLW as it is known by its trading symbol for its units, is essentially a special purpose acquisition company, or SPAC. Think of them as a company that goes public with the sole purpose of acquiring or merging with another company. Their units are made up of common stock and a redeemable warrant, meaning investors get a share and a right to buy more shares later. They also have common stock traded under F.O.R.L.W and warrants F.O.R.L.W, which are basically options to buy shares at a certain price. F.O.R.L.W is an emerging growth company, meaning it gets some flexibility with reporting requirements, which is common for newer, smaller public companies. Now, let's get to the main event in this filing. The report itself is dated the 26th of June 2026, but the key events it is reporting on happened a little later. On the 7th of July 2026. This is a standard current report, an 8K, which companies file to announce major events that shareholders should know about. The big news here falls under item 5.02 of the filing, which deals with changes in directors and executive officers. This is where we see the most dramatic shifts. Companies often use these changes to signal a new direction, and here it looks like a pretty significant overhaul. On the 7th of July 2026, the company saw 3 directors resign from its board of directors. These were Alvin Wang, Stephen Markscheid, and Rahul Mewawalla. These weren't just casual departures. The filing states clearly that these resignations were not due to any disagreements about the company's operations, policies, or practices. Instead, it says these departures are part of a comprehensive governance restructuring. This kind of language usually means they are bringing in a new team that better aligns with the company's new strategy. Think of it like a sports team changing coaches and key players to adapt to a new game plan. On the same day, the 7th of July 2026, the Chief Financial Officer, Ms. Coco Cao, also resigned. Again, the filing assures us this was not due to any arguments about accounting, financial reporting, internal controls, or management. This means the company is likely bringing in a new finance chief to lead them in a new direction, probably related to their future acquisitions or strategic repositioning. But it is not just about people leaving. The filing also announces the arrival of new talent. Also on the 7th of July 2026, 3 new independent directors were appointed to the board: Nanak Warman, Jay Eso, and Mark Disabato. These new directors aren't just casual additions. They are being placed on key committees. Nanak Warman and Jay Eso have been appointed to the Audit Committee and Compensation Committee. Mr. Warman will lead the Audit Committee, and Mr. Eso will head the Compensation Committee. This signals a focus on oversight and financial responsibility, especially with Mr. Warman, who is a certified public accountant and a chartered financial analyst. Let's look at these new directors' backgrounds. Nanak Warman is currently the Chief Financial Officer of Citratech Inc. and has over 15 years of experience running his own accounting and reporting firm. He has a strong background in financial oversight for public companies, including helping them move from the countermarkets to major exchanges like NASDAQ and NICE American. He is also designated as an Audit Committee financial expert, which is a big deal. It means he has the specific financial knowledge needed to oversee the company's financial reporting and audits. Jay Eso brings a different kind of expertise. He is an executive performance coach and organizational consultant with over 2 decades of experience. He works with CEOs and founders of growing companies, focusing on things like how people behave in organizations, how effective the company is, and if everyone is working towards the same goals. His background includes teaching psychology and helping companies restructure, particularly for AI adoption, leading to cost savings and positioning them for acquisition. This suggests the company is looking to improve its internal operations and strategy, perhaps in preparation for a significant merger or acquisition. Mark Disabato is a seasoned executive in governance, risk, and compliance with over 22 years of experience. He has managed security and policy frameworks for big financial institutions and global companies. His resume includes leadership roles at places like Citi and Deutsche Bank. He is also a US Army veteran with a background in intelligence. His expertise in risk management and compliance is crucial for any company, especially one like F.O.R.L.W that is actively looking to merge with or acquire another business. The board has determined all 3 are independent, reinforcing the idea that they are bringing in fresh, unbiased perspectives. On top of the board changes, there is also a new Chief Financial Officer. Greg McCraw was appointed CFO, also effective the 7th of July 2026. He is quite experienced with over 30 years in public and corporate accounting and finance, specializing in US Generally Accepted Accounting Principles, or GAAP, which are the standard rules for financial reporting in the US. He has a history of helping public companies with their financial reporting and regulatory compliance. Interestingly, Mr. McCraw previously served as the Chief Financial Officer of Data 443 Risk Mitigation, Inc., and also has experience with other companies like Lightwave Dental Management and FMA Group. His background suggests a focus on solid financial reporting and operational efficiency, which is critical for a company in the SPAC space that needs to ensure its target company is in good shape. Beyond the personnel changes, there is a note about other events. Under item 8.01, the company announced that on the 7th of July 2026, it moved its headquarters. This often happens when a company is undergoing significant restructure or preparing for a major transaction. The company's telephone number has also been updated. Finally, the report is signed by Jason Remillard, the Chief Executive Officer, on the 7th of July 2026. This confirms that the leadership is aware of and authorizing these changes. So, what is the story here? This filing is a clear signal that FORLW Acquisition Corporation is actively repositioning itself. The departure of existing directors and the CFO, coupled with the arrival of experienced new directors and a new CFO, points towards a company that is shedding its old skin and preparing for something new. This kind of significant leadership turnover is often a precursor to a major business event, like a merger or acquisition, which is the core business of a SPAC. The new directors, with their expertise in finance, governance, and organizational performance, suggest the company is prioritizing strong oversight, compliance, and strategic execution. This is crucial because for a SPAC, the success of its target acquisition is everything. Looking at the bigger picture, this move by FORLW Corporation is a classic example of how SPACs evolve. They have a limited time to find and complete a merger. When leadership changes occur like this, it often means they have either found a potential target or are making drastic changes to find one. The focus on an audit committee financial expert and a CFO with deep reporting experience suggests they are very serious about due diligence and presenting a clean, well-managed company to the public markets once any merger is finalized. This could be seen as a positive step, demonstrating a commitment to good corporate governance and financial transparency. However, it also means the original strategy or management team wasn't deemed sufficient for the next stage. The risk I'm watching is whether these new appointments will accelerate the company's ability to find a suitable merger target, or if this reshuffle itself causes delays. My biggest concern is the inherent uncertainty with SPACs. The success of the entire venture hinges on the quality of the company they ultimately merge with. And these changes are a step towards trying to ensure that quality. What I am actually looking for is any subsequent filing that might hint at a specific target company or merger agreement, as that will be the true test of this new direction. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If this analysis was valuable, hitting that like button really helps. And subscribe for more deep dives. Don't forget to check out the Discord in the description.